Median home prices just dropped significantly, and we haven't seen numbers this low since April of 2024. Inventory is rising still, and sellers are definitely feeling the pressure. Buyers have more leverage in this market than they've had in a while. Let's break down right now what's happening in Las Vegas real estate. Hi, and welcome to Invest with Jim, where you'll find real estate insights that no one else is sharing. I'm Jim. I'm a Las Vegas real estate agent and investor. And whether you're buying, selling, or just keeping an eye on the market, this is one of those moments where paying attention to the market will really matter for you. Let's start with the numbers. So as you can see here on the screen, the median list price and the median sale price both took a big dip. In fact, we haven't even seen prices this low since going back to April of last year, 2024. And the same goes for price per square footage. Even though we had 1,388 listings withdrawn from the market, inventory continues to rise because we've seen 2,323 new listings this last month. Homes are sitting longer, days on market continue to climb, and price reductions are happening more often again. That's a very clear sign of a buyer's market. So looking at the area by area numbers, as you can see here on the screen, in Summerlin, sales numbers or the closings have gone down significantly. But what I'm noticing here on these numbers is that most of the sales are happening in North Las Vegas, Northwest Las Vegas, and then Southwest part of Las Vegas. I think this is because of affordability. Summerlin, Henderson could be a little pricier areas. People aren't moving just to move right now, but there are still a lot of people that want to own a home. So there's a lot of first-time home buyers, and they're starting with entry-level homes. And you'll find most of those in North Las Vegas, Northwest Las Vegas, and possibly Southwest Las Vegas too. So for sellers, this is a tough market. A lot of homes are sitting on the market and going unsold because a majority of sellers out there are still way too optimistic on the price that they're going to get. The reality is, if you're not priced right at or slightly below what the recent sales are, your home is probably going to sit. And if you're holding out for a number that's higher than the comps, my honest advice is to wait to sell when the market improves for you as a seller. Right now is not a good time to try to test the market and try to get top dollar. It's more important than ever to sit down and have a strategy session with me and my team, and let's assess your situation and decide together what your options are, whether it's coming up with a realistic selling plan right now or waiting until it makes the most sense for you. If you're in the market to buy right now, the good news for you is that this is where you have leverage in this market. There are more homes on the market than there are home buyers shopping for homes right now. If we find the right home for you, we can make an offer that we're asking for concessions from the seller, like closing costs, maybe interest rate buy downs even, and definitely get your buyer agent's commission covered in this market. This is an advantage that we don't see all the time. So if it makes sense for you to buy right now, meaning that you've saved your down payment, your credit is where it needs to be, and everything's in place for you, you can get a great deal if you work with an agent who understands and tracks the market. If you're a buyer right now, it would really strongly consider some of these new builds actually. Builders, they're not like a regular person just selling a house. Hundreds of millions, if not more, available to them. They can offer incentives that a regular seller cannot. They're covering all your closing costs. They're paying for interest rate buy downs. There's a lot of builders right now that are offering things called 2-1 buy downs. I didn't believe in 2-1 buy downs like 2-3 years ago, but right now I think they're not a bad idea. They'll pay for your interest rate to be lower in the first 2 years possibly. So you have a lower payment because you're paying a lower interest rate than what the regular rate would be. So for example, let's just say rates are about 6.5 right now. Well, in a 2-1 buy down, your rate for the first year might be 5%, and then the next year is like 5.5%, and then it finally goes up to 6.5% on the third year. But the way things are looking right now, I think there's a strong possibility mortgage interest rates could go down a decent amount in the next, say, 12 to 24 months. So if you're in like a 2-1 buy down, you're enjoying the lower payment for the first couple years, and hopefully within those next 2 years, the actual mortgage interest rate will drop where you can refinance the whole thing into like a 30-year fix, and then you locked it in. So you enjoyed the affordability for these first couple years. You locked in the price now before they shoot up when interest rates go down. That's my advice for you if you're really looking. A few months ago, we started tracking this number, and that is the REO numbers, which are basically foreclosures. And I can tell, look at the numbers on the screen, there is not a significant jump or anything, still kind of on track to what we've been seeing. So if you didn't already know, I do own a property management company. It is called Masterful Property Management. If you're interested in finding out more about property management, go ahead and click the link over here. The reason why I bring this up is I have meetings with my broker and operations manager over there, and we're talking about tenant applications. We're managing properties, we put the homes on the market for rent, and we're fielding all these applications for them. And one thing that we've noticed noticed a lot more in the recent months are credit card late payments. Because when we review an application, we pull a credit report and we review their credit profile. That's something that we've noticed a lot, that late payments on credit cards are more common right now. Maybe not in April and March. We're talking about late pays in July, June, like more recently. Another thing that we're noticing that affects people's credit scores are high utilization. So what that basically means is just using a lot of your available credit. Let's just say you have a credit card that has a limit of $5,000. If your balance is always like around $4,000 on that, you're using like 80% of your credit limit, which would mean that that's high utilization. You should ideally be below 50%, because any more than that, it's going to start hurting your credit score. If I interpret that data, I'm just seeing that people are living off credit cards more and having a hard time making the minimum payments even. We're seeing late payments happening a little more. And if your credit card balances are just increasing over time, you're basically living a lifestyle where you're spending more money than you actually earn. You should be using credit cards in a way where you're getting points and paying it off every month. And I bring this up because what if you bought a house at the end of 2022? Interest rates had gone up. The real estate that you purchased has not gone up in value very much. You either have very low or no equity in your home right now. And then you're living off credit cards too. This could come to a breaking point for you. If your credit cards start piling up, you can't make the payments, you have this high interest rate mortgage as well too, and you have no equity to sell, this is where you're gonna find yourself in trouble. And I think we might see more distressed or forced sales going on the market if this trend continues. But again, like most data, there's always a lag measure. I'm gonna be keeping track of this for you guys and seeing how this really all plays out. Because if there's more sellers that are in a financial bind, they can't pay credit cards, they can't pay the mortgage, they have no equity, we're gonna see more distressed sales, and distressed sales often sell below market, and that's kind of how prices continue to shift downward. That all sounds very bad for a lot of people too, but if you're on the investor side of things, this could present great opportunities for you to buy. If there's distressed sales or forced sales and they're selling below market, as an investor, this might be a great way for you to pick up more properties at a lower price, which could help you cash flow positively, which has been very difficult to do in these last few years because the interest rates are so high and the prices are so high too. So if you're an investor and you want to be added to my distribution list of when I see these great deals pop up, drop a comment and let's get connected. As we move deeper into Q4 of this year, the type of seller that we see in the market changes. No one really wants to move during the holidays. So if someone's selling during that time, they must really have to do it. And same goes for buyers. Most people don't want to go home shopping and move during the holidays either. So if they're looking to buy in this market, it must mean they're pretty serious. As an investor myself, this is when I usually pick up properties actually. I think I buy a lot of my properties in December because of this reason. We have motivated sellers, we have low competition among buyers, and this is generally where you find great deals. There's a lot of people that want to do this by the end of the year, right? So if you're looking to invest this year too, reach out to me, let's connect. And then finally, on the personal side, we hit a great milestone this last month. We got to over 100,000 subscribers. Thanks to you guys for watching and subscribing. And I want to continue to bring value to you guys because some of the videos that you guys have enjoyed the most are ones based on comments people left me. They're like, hey Jim, check this out, do a deep dive on this, explain the days on market more, stuff like that. We will be doing a little more real estate videos where I'm showing you featured listings, new home communities that are offering great incentives, things like that. But if there's a topic you want me to cover, please drop me a comment. I would just want to bring information to you guys that you guys want to see. Thank you for subscribing and watching the videos. I really do appreciate it. 100K, I'm very surprised that we're here. I'm very happy. On to 1 million now, right? To sum it up, the prices in Las Vegas right now are going all the way back to the levels where we were in spring of 2024. Inventory continues to climb, sellers are under pressure, and buyers are finally holding all the leverage. If you're buying, don't be afraid to negotiate. If you're selling, be realistic or be patient and wait. And as always, if you're planning a move, the strategy has to fit your personal goals and the current market. Thanks for watching. If you found this video helpful, please like and subscribe and share it to a friend that would find it useful as well. If you're looking to buy or sell, be sure to reach out to me. You can give me a call or visit my website. Thank you for watching, and I'll see you on the next one.